I'm talking to anyone out there who's thinking about starting their own business with more than one person. You're not sure whether or not you need to start a partnership, a corporation, an LLC. How does this all work? So today I want to talk about the benefits of setting up an LLC that's taxed as a partnership and how that can save you on your taxes. So unlike corporations, which are taxed at the entity level, an LLC that's taxed as a partnership is what's called a pass-through entity. So what that means is, as compared to a corporation, when a corporation files their tax return, they have to pay a 21% federal tax on the net income from the business. And then in addition to that, when the shareholders take dividends from the corporation, they're taxed a second time. So corporations have a double taxation. When you're an LLC that's taxed as a partnership, it's great because the entity itself files an information report, which is a 1065, and there is no federal tax on the entity level. However, the partners get what's called a K-1. It'll show their share of the partnership's profit or loss, and that is then input on their personal tax return. So the partners would only be subject to taxation one time at the federal level on their personal returns. Typically, when you set up a partnership, you'll create what's called a partnership agreement. And this is where you'll determine the percentages for each partner that are then input onto the 1065, which flows into your K-1 that I mentioned earlier. Partners in a partnership can be general partners or limited partners. General partner generally means that you're involved in the day-to-day activities of the partnership. You're helping make managerial decisions. And so the income you receive on your K-1 will be subject to self-employment tax. There are also limited partners. Now, this would be the type of partner who is not involved in the day-to-day of the partnership, and maybe they're just a passive investor. And so in this case, on their K-1, it'll be notated that they're limited and their income from the partnership would be passive income and not subject to the self-employment taxes. If you'd like more information on partnerships or what type of entity is best for you in starting your new business, please let us know. We'd be so happy to help. Thanks so much for tuning in.